All right, perfect, ladies. Oh, I didn't realize the mics aren't off over here. All right, it's here. So mute.
A lot of noise.
All right, there we go. Thanos, those mics, all those mics gone. Good morning from Vienna. 1 year recovering from surgery, so no webcam, no problem, no problem. We wish you a speedy recovery. Okay, so what we're gonna do is this is gonna be 90 minutes of question and answers. And before we get into that, we're gonna create another channel here today, and that channel's name is gonna be accountability. And in that channel, I would appreciate it if people could, like, post about how their week went, how their trades went, because that's what I'm going to do. I'm going to start by posting out, like, how my week went, how did I feel, like, what was it through Monday, Tuesday, Wednesday, what happened when we had, like, a little bit of a range on Thursday, did we lose our patience or our focus or whatever the case is. So I think that's going to be very, very important, where we could really write down the thoughts we went through, because most times, while we're trading, while we're looking at the charts, while we're attending live streams and watching analysis, we get lost in all that, right? We get lost in all that, and we also lose track of, like, where our thought processes are. Shall we start with orientation of what? Yes, start with the orientation. Chris, why is your name Chris, but your name is YYQ? I never got that. Okay, so I think the audio is going to come through here. All right. So, if anyone has had some issues this week, we can start off. No question is a stupid question. Trust me. There's no question like that here today. So today is just going to be a safe place to ask a question. The screen record will be shared later. Absolutely. Absolutely, it will be shared later. Let's see here. So who had some issues this week? Who had some issues? And what was your biggest issue this week? Pinder Singh, good morning. Good morning. What's your thought process before taking a trade? What's my thought process before taking a trade? Okay. So what I'm going to do is I'm going to tie that question into something that I wanted to talk about. And that was this loss I had right over here. This $44 loss. This was on gold, 30-minute time frame. And I guess I need to share my screen as well, right? Okay, let's do that. I think that's going to be very important. Oh, we don't want to end the meeting. We want to share the screen. All right, there we go. Bring out the chat over here. Yes, so do this over here. So basically, initially, while I was looking at this chart, we were looking to see that, okay, we have some sort of a resistance created at 2350. So the first thing I need to understand is, okay, what's my bias? What am I looking for, right? What's the trade idea? So I started with the daily. I looked at the daily, and the daily told me that, okay, we may be continuing to push up. We may start to go bullish. I'm like, okay, perfect, no problem. Starting to look at the 4-hour time frame, and the place where I took this trade at that time, price was trying to move bearish instead of to go up on the daily time frame. So now looking at the 1-hour time frame, we start to understand that, okay, we've created some sort of a resistance at 2350, and now candles are trying to push down. If candles are trying to push down, what's the lowest point where price could go? Because we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 1-hour candles trying to move up. So maybe we're trying to push down, and maybe if we do push down, so let's measure this range. This is a, how big is this range? This is like almost like a 200 pip range. Start to go down to the 30-minute time frame. And this is where we identified that, okay, we have some sort of a support formed right here. This candle has closed below support. So if this candle has closed below support in a daily uptrend, right? And now we are trying to look for a counter trend trade. What's the probability we're going to continue to push down? And if we look at the time right here, this is like 5:30, the wait time 5, 6, 7, 8, 9, like around NYSE open, this time right here, around NYSE open. So obviously buys the sells, took the sells. And my biggest problem in this trade was not giving the trade enough time to breathe, because when I took the trade, my stop loss was somewhere at like 23.43 because price had moved down, but this wick wasn't as big as it was in the end. Like it wasn't till 23.43, this wick. So when it started to move up, went in like, drawdown, whatever, like, 10 pips, 12 pips, 8, 9, 10 pips. So at that point, I decided to close the trade. So I think what I should have done, because like, right after I closed the trade, price actually dropped 55 pips. So my biggest takeaway from that was that, okay, I closed the trade and then price went in my favor. And that happens to a lot of people out there. When you close the trade or you lose confidence and price goes in your favor anyway, I start to ask myself that, okay, I closed 100%. Maybe I should have closed 80% so that I could have actually been in the trade, because maybe before price went down, it was doing some sort of a bigger liquidity grab, right? A bigger liquidity wick, just like right over here. We had a huge liquidity wick. So maybe this wick to be at least 20 pips, 18 pips, like, that would have made sense, because this wick was 55 pips right here. 55 pip liquidity wick. So that's how I kind of like, planned my trade, and we started to move down, and I started to see like, where we could have given a trade a second chance, which I think I posted in the price action breakdowns as well. All right. Sohail Noor. What's this? So when we focusing on, let's say, a 30-minute time frame, do we only focus on that particular time frame? Okay. Ooh, because what happens sometimes is that as per 30-minute time frame, there's a very good setup forming, but when you go down to 15-minute, you might see a rejection. Yeah, so basically what happens is when you're looking at the 30-minute time frame, it's very important to stay on the 30-minute time frame, right? So for example, let's say the 30-minute time frame is going bearish. Okay, so let me take a look at this on the 15-minute. So I think that was right over here, right? Yeah, right here. So right here, I got stopped out. So basically, the 30-minute is pointing bearish, 1 hour is pointing bearish, and maybe the 15-minute, you see something form like this. Like we're creating some sort of a support, or a 15-minute shows some sort of a rejection. So maybe when the 15-minute is showing some sort of a rejection, maybe that rejection is a liquidity grab on the 30-minute time frame. Because at that point, what you got to look at is that, okay, if the 15-minute candle is closing, is that 15-minute candle closing also making the 30-minute candle close? Or is that 15-minute candle closing is just the first half of the 30-minute candle? So that's something you need to understand, because if that 15-minute candle is closing with a rejection, let's say, for example, you're looking for sells, and if the 15-minute candle is closing with a rejection, and that's also closing the 30-minute, then you got to look at the 30-minute candle and see how is the 30-minute candle closing. So you see right here, this 30-minute candle, like, it closed with a rejection, or you got to see that, okay, if it's the first half of the 30-minute candle closing, then where do you think the next 15-minute candle can go? So generally speaking, I only look at the 30-minute to see where price is going to go, or to see where the next 30-minute candle is going to form, or how it's going to form. I look at the 30-minute. Then sometimes I look at the 15-minute to see, okay, can I get a better entry, or can I get a better confirmation? Like, these days, gold has had a lot of volume. So whenever gold has a lot of volume, it's really pumping and grooving. Like, if the 15-minute candle, like if we measure these candles right here, so this body, 27 pip body, total candle, like, 80 pips. This one right over here, total candle, 60 pips. This one right here, 80 plus pips. This is not normal, This is not normal. So in these situations, sometimes I do look at the 15-minute candles, because like, there's so much volume, and you can get some better market structure on the 15-minute. Okay, I have an issue. Like, I can do trading. I made profits, 500 to 15K in 4 months. Okay. And in one trade, I lost everything. I'm not good in using stop loss. My 7 stop loss. I had your course on market fluidity. I use risk management, but not good at it psychologically. What's this? Just removed and no stop loss, a loss account. A few days back, I grew account from 700 to 3,000, and in 1 month, and then again lost everything. Now again, Okay, so you're a good trader. Raja, I really need advice and I'm going to take notes, things. We'll try to follow up in the end. Messed up, please. Can you advise? Yeah. So basically, if you have grown accounts, so this was a direct message. Okay, so I'm going to read this first. But anyone who sends a direct message, I'm not going to read it because this question and answer session is for everyone. And if you're sending a direct message to me, then no one else can read it. It serves no purpose at all. So please, no direct messages. So I'm going to send this message right here so you guys can see what I'm reading. All right. So basically the issue is Saqib. Saqib is a profitable trader, you know, and I'm not sure if you have ever withdrawn anything or not, but you are a profitable trader. You've grown 500 to 15,000. You've grown 700 to 3,000, 800 to 2,400, you know, which means you're giving things time. So he grew 500 to 15,000 in 4 months and then blew it, like, you know, lost it. So you're a good trader. You can make profits. You don't have problems in being, like, you know, disciplined enough, it seems, because you're taking a reasonable amount of time to grow an account. I would say the only problem you have is respecting your stop loss. Because here's the thing. If you can respect yourself enough to be a good trader, like this is all psychological now. If you can really respect yourself to grow an account, and you can respect yourself enough to say, okay, like, you know what, you're a good, respectable trader. You have to respect your stops. That's it. There's no other way out there. Because if you're not going to respect your stops, here's what's going to happen. Psychologically, you're going to start to think you have a problem when there's no problem at all. The only problem is when price comes close to your stop loss, if not 99, 95, or even 90% of time, we know the stop is going to get hit. When I'm in a trade and price goes to my stop loss, I know, okay, yeah, my stop is going to hit. Like a lot of times that has happened, price comes to my stop loss and I'm going to move my stop loss and I'm going to think that, okay, I know it's going to hit my stop loss. So let me move my stop loss. And then it starts to hit the second time and then I move it again. It starts to hit the third time. And then I've lost more than I wanted to lose. You know, that's the thing, because I don't want to be wrong. And there's no problem. Like if you are accepting the fact and if you're facing yourself that, okay, I can accept I'm wrong. I can accept that maybe my entry was too early or my entry was too late. I can accept that. Once you can accept that, you're going to be perfectly fine, you know. And this also ties down to whether you've ever withdrawn any money or not. You know, if you've grown 800 to 2,400, I want you to withdraw some money. Like withdraw like $500, $200, withdraw something, because the more you withdraw, the more you tell yourself that, okay, like, you know what, I am actually on the right track. Because you have to withdraw. In the beginning, I would never withdraw money at all. I would grow 700 to 5,000 in 2 weeks, 3 weeks, come back down again, grow it back up again. And I never withdrew money. And the moment I started to withdraw, like, you know, $200, $400, $500, $200, and started doing real life shit with that money, then things start to change a little bit, because now I knew that, okay, this amount I made online, it's in my hands or it's in my bank account, and I can go have some food with it. I can go pay a bill with it. Because the more you start to do that, the more you start to treat trading seriously and you stop being reckless. And that's all what it is. Like if you're letting your stops run wild, if you're letting, like, you know, market throw you around like a bully, the only problem is that you're not focusing on your stops. You're not focusing on, okay, let me give things more time. And especially, you're not focusing on the fact that, okay, can I actually withdraw some money here today, this week? So withdrawing funds, that's a big part. What's stop loss average do you think is good for gold on 30-minute is much wider? Yeah, you have to go through the content first before you ask that question, because it's not about the average stop loss. It's about what the previous candle is showing. Like, you know, what's happening in the previous candle. That's the most important thing. On 5-minute, I use 25 to 30 pip stop loss. Oh, wow. Okay, no, you got to take a look at the 15-minute or the 30-minute. Let's take a look at this chart over here. This chart is a New Zealand CAD chart. And that's it. What were we? Yeah, there's no question to follow with this chart. Okay. Sir, what if the 15-minute closes with no wick on the range side? If the 15-minute candle closes with no wick on the range side, I would ignore that 15-minute. I wouldn't focus on that 15-minute if it closes with no wick on the range side. I would wait for the next candle to close, or I would just take a look at the 30-minute and see what's going on. I know that I missed a move on the 30-minute, but now I saw that the last 15-minute candle has a wick, and next one first wick down and re-break this high to fill the wick because it's volume time after NY open. But when the candle is going up, it's coming back sometime. But then in my mind, I think, should I close the trade or can I go and draw down? And it's happened many times. I see moves before, but when it's about to execute, I have this issue. Please guide me for this. I shared images in Psychology Discord. So you shared some images in Psychology Discord. Let's take a look at this here. Oh, okay. Okay. So you had a, what was it? Buy? Oh, buy, sell, and then price went down. So, okay, so you basically lose confidence in a trade because it's like, taking its time to move. Okay, no problem. Yeah, that's basically the same issue I had on Friday, where sometimes I do lose confidence. And whenever you lose confidence, you have to build that confidence back. And the best way to build that confidence back is to hold the position, because you have to practice holding the position. You have to practice it. Just like when you try to hold yourself with one arm on like a monkey bar, the first time you're not going to be able to do it because your grip strength is not there. So you're going to train your grip and you're going to try again. You're going to try it again. Then what you're going to happen is you start to hold yourself for 2 seconds, then 5 seconds, then 10 seconds, and this is the same thing with holding trades, because in the beginning you feel scared or you're not confident enough. And when that happens, I suggest close 90% and leave the 10% running, or leave 5% running, because that's how you have to build that confidence to hold. Because one day if you leave, let's say 10% running, you're going to be like, okay, you know what? I lost confidence. I closed the trade, but at least I was still in the position, even if a smaller one. And that's going to add to your confidence. And if you see that happen again, maybe you let 10% run, then one day you're going to let 50% run. Then a day is going to come, you're going to say, okay, you know what? I've seen this happen over and over again. Instead of closing 50%, I'm going to let the whole thing run. And if it does go in your favor, you're going to be like, okay, perfect. You know what? Now I'm more mature and I can hold positions because I've had that confidence now. So you just got to build your confidence. So never close 100%, always close 90%, 95%, and leave the rest running. Because the worst that's going to happen is you're going to lose 10% of what you initially wanted to lose. That makes sense? Like if initially you wanted to use a one lot and you were risking $200, right? So you closed 90-cent lots. Now you have 10-cent lot running. So you may lose $10, $15 instead of $150 or $200 on a one lot. So that's what it is. You have to build that confidence slowly. Mr. Raja, I have a question. I have a problem in accepting my losses. Well, we all do. We all do, buddy. We all have problems in accepting our losses. Even if I took a profitable trade around 2%, and the trade after that went in loss, okay, 0.5%. This is leading me to do another trade and then lose my profits and some time the whole account. Well, Mr. Zoom user, that happens with all of us, because if I take a look at this right here, this is a perfect example. Look, on the 26th, I took a buy on gold, right? Made $77. And then, so these are two buys, made about 97, whatever. Made $97, okay? And then I took a sell on gold and I lost $44. So in the end of the day, when I did have this loss, I made $58. I was up $58 in profit. I never even thought about the fact that, okay, let me take another trade and let me get back my profits up to a 90. I never thought about that. I looked at this, I'm like, okay, you know what? I've taken a loss. Now my profit is up $58. $58 is way better than $0. $58 is way better than negative $1. $58 after taking this loss is 58 fucking dollars. And I knew that, okay, if I take another trade, I may lose these $58, and I knew if I take another trade, I may, make more. But why even risk it? If this was me in 2016, I would have probably lost the whole account in trying to chase that loss back. 100% back in 2016. That would have happened. But I'm a mature trader now. I'm a mature trader. This is a business. I have to treat it like a business. I have a family to feed, and I can't let myself loose. I can't, and you can't. You have to take this seriously because now if you've taken a loss and you're ending the day at break even, this means the market is giving you an opportunity to end the day at break even. That's what's happening. But if you don't take that opportunity and you be reckless and you take advantage of the market is going to take full advantage of you. That's all what's going to happen. It's going to happen over and over and over and over again. Trust me, guys. Like, how many of us have not been accepting our losses for years and we think something's going to change? For years, right? Just when you take a loss, try stepping away from the charts for 1 month. That's it. That's all what I ask you guys to do. When you take a loss, just step away from the charts for 1 month, adopt this change, and you're going to see a change in yourself. If you don't see a change in yourself, just leave the university and just go back to your old habits. Because you want to see a change by repeating the same things over and over again, which is not going to happen. Here's my question. After this break retest, I took buy when bullish candle formed and got stopped out. How could I have avoided this loss on buy? Any suggestion? Yeah, we can't see anything. Maybe send like a screenshot or something. Why is this thing so bright? Okay, how can I know if it is a fake out? Because most of the time, if you see, for example, bullish candle closing above resistance, and sometimes no wick, okay, this means there will be bullish continue up, but sometimes this is a fake out. How do you know? Can make entries and hot stop loss. Hot stop loss. Okay, so basically, we never know if there's going to be a fake out. We just don't know that. We never know if there's going to be a fake out until it happens. It's the same thing as when you're playing football, you're playing some sports, and someone fakes you out. You could say, okay, how would I know it's going to fake you out? You're never going to know it's going to fake you out, right? Second part of the question is when a candle closes with no wick, just like this right over here, we closed above resistance, no wick over here. When a candle closes with no wick, we have discussed this in a module about candles that just let the next candle close. This candle closed with no wick on the top. Look at this candle. Next candle closed like this. And we know, yeah, now we got to stay away for sure. And the next candle went down, created support, whatever. And then there was low volume at this time because market was about to close. So when a candle closes with no wick, just stay away from it and wait for the next candle to close. When it's trending bullish, why can't we take a sell at the high? You can't. Because, okay, here's the rule. Here's the golden rule about trading. I'll tell you a secret about trading. If you're looking for a sell, wait for a candle to close in your favor. That's it. If you want to be reckless and you want to take a sell at the top, just at least wait for the candle to close bearish. So you could say, oh, you know what? I waited for the candle to close bearish. Or you can say, or you can't say, oh, yeah, price was moving up, so I took a sell because I thought it's going to go down. No, no, no. That's going to make you seem stupid because you wanted to go left. You wanted to go left, and there was a bus going right. You hopped on the bus thinking it's going to go left. No. At least hop on a bus that's going left. So wait for the candle to close bearish and then take a sell. So I wouldn't do what you're doing there anyway. But yeah, you can't. If price is moving bearish, just look for sells. Look for resistances to form. Look for sells. If price is moving bullish, look for supports to form. But at least if you want to be reckless, wait for the candle to close in your favor. That's very important. I have an account of $2,000. How could I know how much my lot size should be? Average, leverage is 1 to 30, whether on gold or GJ and so. How do I know what my how much my lot size should be? It depends how much you want to risk, It depends how much you really want to risk. So, for example, right here, if I look at this, if you're talking about leverage, this account has 1 to 500 leverage, right? So if I go to gold, pound yen, 1 to 500 leverage. And from here, I can see that if I want to open up a 3 lot, I need $700, so I need a lower margin to open 3 lots. So if I go to an account that has 1 to 100 leverage, right here, pound yen. If I type in 3, now I need $3,700 to open up a 3 lot. Like, you know what this means? Right? With a lower leverage, you need a higher amount to risk 3 lots, which means if you do lose on 3 lots, you will lose less, right? Because you need a higher amount. But if you have a higher leverage, you can use 3 lots on fucking $700, you know? And using 3 lots on $700, it's madness because it goes 10 pips one way, you're down 300. So how does that make sense? So it's very, very dangerous. Yeah, but 1 to 30 is good. I think you have to see how much you want to risk, basically. When and how do you start scaling an account, considering it's still fresh for the trader and he's on a small account? Or would you recommend not to scale on account initially, just start trading 2 to 3 months ago? Or you just started trading 2 to 3 months ago? Congratulations. You are in the final frontier. Market fluidity is something which I call the final frontier trading, because like in this way you actually learn to be fluid, being fluid in the market. So anyway, the small account is good. I think in the beginning, you need to build confidence in yourself that you can actually take winning trades. The problem with people who start with small accounts in the beginning is that they think they'll be able to flip these accounts. They think they'll be able to aim for some percentage, you know, which is maybe like, you know, like 10% a week or 10% a month. They have these goals. And it's not even about having a small account. It's about having an account in general, because generally, if someone can even afford to deposit like, you know, $5,000, $10,000, initially they'll say, okay, like, you know what, I'm going to aim for 5%. I'm going to aim for 10%. No, in the beginning, you have to focus on, okay, instead of aiming for a percentage, I'm going to aim to see if I can get a winning trade. You know, you're going to aim to see whether you can get one winning trade a day or one winning trade a week, and then start to really study that trade and see what's going on. Like what we did all this week, every trade I took, right? It was a premeditated trade, every trade. And then after that trade was taken, it was followed by notes. Okay, why was this trade taken? Like, you know, what were the things that went in my favor? What were the things that went against me? If I did take a loss, why did I take a loss? How could I have done better? Like, and so all this information is going to help you, because in the beginning, your main obstacle is going to be beginner's luck, because in the beginning you're going to have beginner's luck, and you have to be very careful about that, because in the beginning you're always very disciplined, you're very consistent, you follow all the rules in the beginning. But once, since you start to follow all these rules after a month of having I would say like decent consistency and making good profits, that confidence can get to your head. And then you start to lose, because now you're like, okay, you know what? I'm probably maybe invincible. I can't lose. My analysis is good. My analysis follows the analysis of other profitable traders out there. You know, I'm great. And that's where confidence can get the best of you. And that's where you have to be very careful. And that's where you start to move your stop losses. You start to think about higher time frame. You start to change your strategy, and you just really start to go in a like a spiral which you can't get out of. So you got to be careful. Forcing a trade in the range and not waiting for the close in the trend direction after its breaks. Yes, exactly. Okay, what's this? I have had a similar problem. I was in the UK from 21st March till 8 April. Okay, I had 20K in account, grew it to 260K, never withdrew. Then on 8, blew the account. Now I'm struggling to enter trades. Fear also the wait time zones are harder when I was in UK. Wow. Yeah. You know, the thing is, it's the same thing. You're a profitable trader. You're a profitable trader. You know exactly what to do, but you're letting this loss getting the best of you. That's the thing. You're getting this loss getting the best of you because you blew the account, you know, on one day, 1 week, or whatever that was. That's it. That's all what's going on, you know. And that happened to me in the beginning as well, the entire 2016, and maybe from like January 2017, I lost 150,000 in Quadriga because the fucking exchange just went bust. And then, like, you know, I lost a bunch of other money too, because like, you know, my one cushion went down, and then I lost the trading accounts I had. I almost lost everything in my bank accounts because I started to trade. And when I started to really realize is that I let one loss affect my trading losses, and that's where I started to go really downhill. So then I had to really look back and say that, okay, let me take a look at the times when I was winning, you know, the good times. let me take a look at the times when I was winning, when I was doing well, my analysis was strong, I was taking good profitable trades. Let me take a look at that time. And it surprised me because how simple trading was at that time for me. And I was like, okay, you know what? All I got to do is just go back in that same mindset. I have to forget about what happened in the past. I have to forget about the loss, even though how much painful that is. I got to forget about the loss and I have to move on. And this is something that we do in our real life as well. You know, when something bad happens, for you to move on, you have to forget about all the shit that happened. And you have to focus on, okay, what can I control? You know, what can I achieve with the way I can control certain things and certain aspects about trading? So you're a good trader, man. From 20K to 260K, that's amazing. So you just got to go back in that same mindset. Assalamu alaikum wa alaikum salam. Can you please elaborate the time frame? Like what time frame I actually need? As from the very beginning, I have learned doing top-down analysis, okay, from weekly to 15-minute, but I have been focusing on the strategy for about 1 year. Only thing I'm having trouble is time frame. Sometimes use 5 minute. No, never. Don't use 5 minute. Don't use the 5 minute time frame. So what we're going to do is, in the end, we're going to do a top-down analysis here as well. So I think that's going to be a good exercise to see as well, to do, like, you know, go from daily to, yeah. Here's my question. After this break, a retest, I took a buy when bullish candle formed and got stopped out. Oh, yes. I think you need to send a labeled chart. Okay, what's best to do at the beginning? To start taking 10 pips and gain confidence on that, and then later and learn to let trades run, or the trades run in the beginning. Yeah, so in the beginning, what you have to, I think, let trades run in the beginning. Let trades run. Take like 10 pips. Like now we have a lot of volume, so you can easily get 15 pips, 20 pips, you know. Take those profits and let 10% run, 5% run, because then you're going to be really testing how you feel while trades run in your favor. I took the same impulse buy, which it took after London Open on Thursday. When price broke the previous 30-minute high, I took a buy, stop loss below current candle, but price retraced immediately for 7 pips. So based on my experience, I feel every time I took a trade and wasn't immediately flowing loss, the stop loss would be hit. So I closed the trade, but price went up again. So I gave my trade a second chance. Oh, lovely. And this time it worked. Oh, wow. So should I have believed my analysis and hold the first trade even price retraces immediately? Yes. Yes. Don't be afraid of price retracing. You know, don't be afraid of price retracing, because here's the thing. Okay, let me take a look at this. Let me take a look at that trade. Where is it? Oh, oh no, it's on this account over here. Okay, let's take a look at that here. Which one was it? This one? Yeah. Yeah. Yeah, because sometimes you're not going to be able to always manage risk. You know, not always you're going to be able to manage risk. What's going to happen is sometimes you're going to take the full loss. But if price retraces even 7 pips, 8 pips, but you haven't taken the full loss yet, just let it breathe. And that's the problem I had on Friday when I closed the trade. You know, but it's amazing. You stuck with your bias and you gave your trade an you gave your trade a second chance, because mostly what happens is, what traders are going to do is they will immediately change bias, you know, because if you're going to be looking for buys and you get stopped out or you get afraid or whatever, you lose confidence, immediately you're going to say, okay, you know what? It's a sell. Let me start to look for a sell, and look for a sell, and price goes to where you want it to go. And then, yeah. How do you keep your losses so small? I look forward to the upload of that class on MFU. By managing risk, there are 3 versions already uploaded on how to keep your losses short. But the one on MFU is going to be uploaded probably by Friday. How much pips are enough? Like, how am I aim for very beginning? I think at the beginning, you have to see what sort of a range you have. And that's something which we will discuss during our top-down analysis. What range to look at, what pips to look at, you know? Oh, what's this? I joined yesterday and have a question. Can we deposit in Dominion markets using crypto, later on withdraw via bank? No. No, sir. Let's take a look at this chart. Kritika, if you're still here, you're listening, I think what you need to do is you need to post a chart like this so we can see. Okay, what's this over here? This is gold. All right. Support, support. After there's a clean range, are the support before valid? Yeah, no, they're not valid now, because if these supports were valid, this candle going down, however it went down, it should have respected these areas. You know, if these supports are valid, it should have respected this area right here, and now this area right here. So when this candle is forming, we're looking for this candle to see that whether this candle will form below this area or will it form above this area. So then you got this clean range if we go above or below. I want to learn about the daily open candle of gold. Can you explain more about how they move at the first open candle of market? How often price action work? I would say maybe stay away from it. Whenever gold opens in the beginning during your pre-Asian session, sometimes there's going to be wild moves and wild volume times on gold. So I would say wait for Asian Open before you want to trade gold. In the beginning, I don't recommend that at all. We've seen some crazy things happen at that time. We've seen some liquidity grabs happen. We've seen some flash crashes happen, spreads widen up. So all sort of like all the bullshit that you want to experience in trading, try trading the open of the market. Like, you know, and I can guarantee you within a month or 2 months, you're going to say, oh, yeah, you know what, this makes no sense at all. Yesterday, you shared some things about risk reward ratio being useless. Can you explain how? I mean, if a strategy has a high win rate, but terribly RR, it would still lose. Please explain more. Yeah. Okay. Kritika, I'll take a look at that. Okay, so risk reward. Risk reward ratio, in my opinion, is subjective. I think me calling it useless was a little harsh, but but, but I do believe it's a little subjective. So let's see this here. So let's go to new order and let's take a look at this. Can we make it bigger? No, we can't make it bigger. Okay, let's take a look at this over here. Okay, so right now, right here, the risk reward is, let's do it 1-to-1. Minus 30, and let's do it 30 right here, right? So now the risk reward is 1-to-1 right here. And for example, let's say price is moving bullish. Actually, I want to remove this indicator. Oh, can't do it anymore. Okay. So let's bring it down over here. Let's bring it to 70 pips and let's get the TP to 70. So now we have a 1-to-1 risk reward. And someone's going to say, okay, like, you know what? It's a 1-to-1 risk reward. So I'm going to take a buy. And if price goes up, I win. If price goes down, I lose. Awesome. Right? But my problem is if price goes bullish and if you move your stop loss down to the low right here, now your risk reward is very, very positive. Now your risk reward is 1-to-4 or 1-to-3. Now your risk reward is positive. You know, so when you have a risk reward right over here, let's say 1-to-1, this means you're not moving your stops, you're not moving your TPs, you just have the set trade right there. And if you have the set trade right there, then what you're counting on the fact is that if most of my trades are going to be, let's say, 1-to-2, then I need X amount of trades to be overall profitable, right? So my thing is that, okay, no, let's not do that. Let's focus on if price starts to come down and you do know price is going to hit your stop loss and you do know market structure when price goes down, why can't you close 50% when you know that, okay, now price is not going to go up? So when you bring your stop loss right up over here, now your risk reward is even bigger, you know? And if you had an initial 1-to-1 risk reward and you're closing trades early in a loss and you're making sure you lose less than what you plan on losing, now your risk reward went from 1-to-1 to, like, you know, like 1-to-2 or whatever, or 1-to-1.5, because you've lost less. So that's why I think risk reward is very, very subjective, very, very so even let's say if I have a negative risk reward, if I'm taking a take profit right over here and I'm going to have my stop loss down over here, now my risk reward is negative. Now my risk is 2 and my reward is 1. You know, even if I have a negative risk reward, and if I know how to manage risk, if I know how to lose less than I'm planning to lose, having a negative risk reward, it's perfectly fine, because if I'm closing my whole trade right here because I'm seeing the lows being broken or these lows being broken, and I'm being really mature about managing my risk, negative risk reward, it's still fine to me because you can always move your TP, you can always move your stop loss, right? And really adjust your risk reward. So when someone says I trade based on risk reward, that to me means that they're not moving or they're not managing their trades the way they're being supposed to be managed. So if I'm in a trade, I'm constantly managing my risk, I'm constantly managing my reward, to make sure that I get the best out of it. Okay, in London session tab, let's take a look at this over here. London session. There we go. Okay, what's this? The 30-minute time frame. I took a buy, basis break. Okay, so price broke above here, bullish candle, boom, got stopped out. Was there a way to avoid this loss? Okay, so you took a buy over here. So let's see this. Okay, so we have to zoom in here now. Let's do this. Zoom in. Can we zoom in? No, we can't zoom in. Does Discord lets you zoom in? No. So you took a buy, price went down. Okay, so what I want to know is, so you took a buy right here as we formed support. The next candle came down. Yeah, in this case, I don't think there's anything that you could have done. Maybe looking at this resistance, I would have waited for price to break above this resistance right here, at least. Because for you to take a buy, I think your range of this clean candle should have been more, because this is basically resistance right here. And even though you took this buy, I think looking at this 15-minute candle, yeah, I don't know why we can zoom in. Looking at this 15-minute candle, you have to see whether you could have managed your risk. Like, if you could have closed 50% as price was coming down and so on and so forth. Okay. When and how do you start scaling an account, considering it's still fresh for the trader, or is on a small account, not to scale an account initially, just to start to, okay, we answered that. Let's see here. Can you please give an example of an impulse entry? Sure. Guys, please avoid asking questions twice. Just ask it once. I'm going one by one. So just ask it once and wait for your turn. Okay, let's take a look at this right here. Example of, yeah, like a really good example of impulse entry is right over here. This was pure impulse entry situation because look, we had a resistance right here, right? We had a resistance, candle broke resistance, closed above it. And now I'm thinking, okay, can I take a buy? And I'm saying, no, I can't take a buy. If I do take a buy, the stop loss is, 50 pips over here. So I'm going to wait for some sort of a support, retracement, or some sort of a something to happen, and then the next candle closes like this, small body, small wick, big rejection candle. And if you've gone through the impulse entry module, this is a setup that I love to take, and when the next candle started to break above the high, I looked at the time. Look at the time at the bottom. It's 11:30 Dubai time, 11, 12, 1, 2, 3. That's like London Open, right? This is London Open right here, still London Open. So if you look to the left-hand side, you will see that there were rejections, there were a little bit of a consolidation. There was also a possible wick to be filled with volume. So now you got to ask yourself a question that if you're looking to take an impulse entry, let me point this here. So if you're looking to take an impulse entry as this candle breaks above the high of the previous candle, the only negative, what are the negatives that you have? The only negative that you have is that there's a consolidation to the left hand side, there are rejections to the left hand side, that okay, perfect, fine. Now, what are the positives that you have? The positives that you have is that there's volume in the market. Now, if there's volume in the market, where does it seem the market is moving? It's moving bullish, irrespective of what we have to the left-hand side. We're only looking at the positives, right? Because in life, you obviously have to take a look at the positives, and then your positives, they overshadow the negatives. So anyway, the trend is bullish. Candles are bigger. We have volume in the market. We have London Open. If this candle breaks above the previous high, this is an impulse entry setup. So based on probability, where should we go more? Should we go up or down? And then that's it. And if you say, okay, we should start to move up, then where's the stop loss? Then you start to see, okay, it can be below this current candle, because if we're breaking the high, then it should not come down to break the low. Is it possible to change leverage? Yes, it is. Let's take a look at this chart. This chart over here already answered that. Is this trade valid because we broke below support, but the candle that broke has little to no wick? Can you please explain how to approach this analysis. Renato Alvarez. Where was this candle? Okay. 30-minute time frame. Gold. Because we broke below support, but the candle that broke has little to no wick right over here. We see that. Oh, we can zoom in. Perfect. It has little to no wick. And you took the sell when this candle came down over here for price to go down. Yeah, I think this is good. Like, there are exceptions, because here's the thing. Later on, there's going to be a module for candles with no wicks. Like, in the beginning, we've said if a candle closes with no wick, there's a 50-50 probability price will go in your favor or not. But there's an exception to that rule where you can look at certain confirmations and skew that probability in your favor. So in this case right here, if this candle closed with no wick above support, then I'd stay away. If this candle closed bullish at resistance with no wick, then I would stay away. So this candle closed bearish below support, which means it closed bearish, breaking and closing below support, provided that there's volume in the market. Oh, yeah, I think there was volume at the market. There's volume at that time. There's clean range here at the left-hand side. So what's the probability that the next candle can continue to push down? There's a high probability that the next candle can continue to push down, because this candle closed with no wick. It closed with no wick below a zone. If this candle closed in a range with no wick, then I'd stay away from it. But this one closed with no wick below a zone. There's volume in the market. Maybe this is a counter trend trade now, because initially the trend was bullish. So this did make sense. But I would still consider this as risky, because, it's still a candle with no wick. But then if you're looking at confirmations and you're skewing the confirmations in your favor with logical explanation, then yes, that makes sense. But I would still not go with my regular lot size on this setup, only because this candle has no wick here through left-hand side. Only. At what point in trade's career do you recommend looking into another pair? That comes naturally. Naturally you start to look at other ideas. It's very natural. Which are your A+ setups? My A+ setups are this one right over here, this buy I took at this point, impulse entry. This one was a little bit complicated. Impulse entry. This was another impulse entry. My A+ setups are when price creates a support, like something like this. We create a support, clean range for price to go up, right over here as well. Price created resistance, came down, support form, higher lows and higher highs form for price to go up. Those are my favorite setups, especially right over here as well. Look at this. This candle broke above the high, small body, rejection, impulse entry. You have a nice range, 28, 29 pip range for price to move. The question I have, hey, Luke, the question I have relates to looking ahead at support resistance on gold for this coming market week. Open a 30-minute time frame. We had resistance on 23.49. Is this level still valid? 23.49. Oh, right over here. Okay, 23.49 is still very large with the left-hand side spiked above. I noticed it a few times this past week, but not sure how to approach it. Yeah. So these wicks, they basically become wick fills once price starts to break above zone. So this is what I was looking for here as well. Because if we have this resistance right over here, actually, you know what? We're going to discuss this as we do our top-down analysis in the end here today, because this is something I'm looking at here as well. There are a lot of rejections here as well. There's a resistance right here, and then this becomes a clean range, 70 pip, 65 pip. Interesting next week coming up if we go above 23.42. One more question, bring it on. How can you know exactly when enter, like sniper entry? Okay, first thing, there's no such thing as a sniper entry, because sometimes you entry, hit stop loss, then you wait and hit stop loss again. Okay, even a third time. Oh, very normal. So when you enter and win is the same money you already lost, I know you have to check lower time frame, check the exact momentum, but sometimes it doesn't work. Do you have any advice or secret how to entry in the exactly moment, or most of the times exactly? That comes from just watching price action. That's all what it boils down to. You have to literally sit and watch price action. So if I take a look at gold 30-minute time frame, right? I take a look at gold 30-minute time frame and I start to see that, okay, I took a sell right here, I took a sell right here, I lost a trade, and maybe would have taken a sell here again, stop loss up over here, and I would have lost my trade. And now I'm thinking, okay, what's the exact moment for me to enter the trade? Now I'm confused, I'm angry, and I'm very frustrated because I can't seem to find a way to enter the trade, even though the price is going in my favor. So now I have to explain to myself how can I do that. So here's how I'm going to do that. I'm going to look at this and I'm going to say, okay, I was looking for a sell and price went in my favor. Now, how could I have entered on this candle, which went down, to have a winning trade? Okay, I'm going to say that, okay, there was a wick here to the left-hand side. Even if we went down, the range was 46, 47 pips. But if I would have taken an entry on this candle, my stop loss would have been, 60 pip stop. Wow, crazy. Okay, let's take a look at the smaller time frame right here now. Now I'm looking at the 15-minute time frame, and now I'm looking to see that, okay, so this was the candle that went down. So if I would have taken a sell here, my stop loss would have been 28 pips, and then we could have filled this wick here with volume, 28 pips, and full range like 50 pips. I'm like, okay. And then I'm going to make notes, right? I'm going to make notes of what I saw, what I studied, what I realized, what I understood. I'm going to make notes because if you don't make notes of how your trading day ended, you're never going to be able to go back to relate to what happened the last week. Then you're going to continue making the same mistakes. And I see this happen all the time. I talk to a lot of people every day. And this is a very common theme because when your trading day ends, you're not making notes of what happened. And notes, I mean, not by, oh, the daily high got broken or the London had a reversal or New York had a corrective move or whatever the fuck that is. No, you don't have, you have to look at the, because look, a candle moving this much on this time frame, a 60 pip candle, you're making $600 on the one lot. That's all what you need to know. You only need to know where the next candle is going to go. That's it. There's nothing else. You're not looking at the daily highs or the reversal of sessions or these, like, these magic, rocket science things that people tend to explain on YouTube. No, you don't have to look at, you're looking at the candle because one candle movement can make your trade. That's it. The 30-minute candle, the 1 hour candle, the 15-minute candle when there's a lot of volume. So you have to make notes. So I'm facing issue with risk reward. When I'm winning, I win 15 to 20 pips. But when I lose, I'm losing 30 pips. Okay, so here's what I want you to do, Mohammed. Here's exactly what I want you to do. When you are losing, or when you have actually closed losses of 30 pips, look back at that trade and ask yourself, how could you had lost less? So if I look at my history right here, okay, let's take a look at all history and let's take a look at the bigger. Okay, so I lost 20 pips right here. I'm going to say, oh, wow, 20 pips I lost here. Let's take a look at this. And now I'm going to take a look at this and I'm going to explain to myself how I could have lost less. So I lost 20 pips. Obviously this was a buy. I was expecting price to move up, but price went down and I lost 20 pips. Let me just drop down to 15-minute just to see what the hell is going on. Oh, wow, look at that. So on the 5-minute here, what I can see is that I took a buy here and this candle, it broke the low of the previous candle and I still held the trade a little bit and I lost 20 pips. So maybe I should have closed over there because there was a lot of volume in the market anyway. So always look to see how you can lose less. Android app, no, but it's coming soon. Yeah, Android apps. Google Play Store is the most hardest Play Store to launch an app. Their compliance is through the roof, man. It's crazy. We thought Apple was hard, but Google is super hard. When you're in a trade and the price has moved 20 to 30 pips in your favor, okay, mostly I close all. But if I'm already up in profits, I'll close like 90% and leave the rest running. My problem is I'm always scared going through the charts. I always look for excuse not to trade because I'm scared I might not be, after all, cut for trading. How would you go about that? Yeah, you know what? Like in the beginning when I lost money, I used to be afraid as well. I used to be afraid to actually go to the charts. I'd be like, man, I don't want to open up the charts. What if I lose again? What's gonna happen? You know, like it's very demoralizing. Like, but you have to come over. There's no there's no running away from it. Like, there's a reason why you're in Market Free T University now. At least do your analysis. Do your analysis for 1 week, 2 weeks, do your analysis and see where you want the price to go. And if price does go to where you actually wanted it to go, then you're going to be a little bit more confident. Then you can start to paper trade. You can deposit like $100 and try to trade with $100, like 0.01 lots, 0.02 lots, and that's going to help you a lot. So being scared, I don't know. I think it's more of loss of confidence because maybe you've lost in the past. So that's what's kind of like, triggering the emotion of fear. Because we're not fearful of anything in the world. We're just not experienced in those things enough. I think that's where the fear comes from. How are you? I'm good. Thank you. I have a question about how could I control my greed in trades last week? I catch 40 pips from gold hitting my TP, but I changed my TP to catch 20 pips more, and the trade reverses and hits my break even. Yeah, man, you're getting 40 pips. Just close 80%. Most of all your problems are going to be solved if you start closing 80%, And if you want to do something, I'm not going to say stupid, but if you want to do something dumb, like, like increasing your TP or increasing a stop loss, do it with 10% of the thing running, not with the whole thing. I started trading 3 years ago, but after watching your social media, somehow it popped up on my screen. I have lost many accounts and now I've started again after joining MFU, but still, even one losing trade disturbed me emotionally. I can't control my emotions. Please advise. Balwinder Singh, we have to control our emotions. We have to control our emotions. The person only wins in life if you can control your emotions. Whether you lose money, you make money, if you cannot control yourself with a positive or a negative outcome, it's going to be very, very hard to navigate life in a professional manner. This is very, very important because when you are trading, maybe sometimes like you trade with more than you wanted to trade, or you trade less than what you can afford to trade. Like, trust me, there are a lot of good guys who will deposit $500 and they'll run through $500 accounts every 2 weeks, because they're trading less than what they can afford to trade with. Like, if you can afford to trade with $5,000, go trade with 5,000. If you can afford to trade with 1,000, go trade with 1,000. There's no need to deposit 100 and keep doing hundreds, like, every week, every 2 weeks. It makes no sense at all, but emotions, man, you have to control emotions. There's no book that's going to teach you how to control emotions. There's no webinar, there's no mastermind. It's you versus you. That's it. It's you versus you. When you're taking a losing trade, what are you going to do? Are you going to look at yourself in the mirror and say, okay, you know what? I'm just going to step away? Or you're going to put up your sleeves and you're going to say, oh yeah, I'm going to show the market now who's boss? No, you can't. So you have to control your emotions. You have to. It's very important. Should we book partial with small account or book all with profits? You remember I just bought MFU in your last live stream. Start with 400 account from tomorrow. Should we book partial with small account? No. When you have a smaller, it's not about a smaller account. This goes back to what I talked about earlier on about focusing on having winning trades. Because if you can focus on having winning trades, things are gonna go well. Look at this, right? So you got a $400 account. You have to aim to make $100 your first month, because then you can put that 100 to a side. You have to focus on making $100 the first month. That's it. It's very painful. Very painful. Very, very painful to make $5 or $10 one day or Monday. Let's say Monday you make $10. You see someone screenshot and they made 10,000, or they made 1,000, or they made 5,000, whatever the number, and you just made $10. So now you gotta condition yourself to say, okay, I made $10. That means I made $10. I'm not gonna compare myself and my $400 and my $10 profit to someone who's got like a $5,000 account and they're making $500. That's the comparison That's the battle you're going to get stuck with for a long time if you start to do that. So if you're having a $400 account, you got to focus on, I'm just going to focus on $100 the first month. That's it. In the month of May, I'm going to focus on $100. That's it. If you can get to that point, man, trust me, in 6 months, this is just going to compound. Maybe this compounds to, like $500 in a month. Imagine that from $400 initial investment. Just imagine how great of a deal is that, but you got to be very, very patient. Patience. Look, man, I grew this $1,000 account to like 3,900 from 11th March. In May, it's going to be 2 months, patience. I've been trading 4 years ago, but till now, I've lost around 8K, taking into consideration that I've been following your way in skills since you were in Canada and now aiming to have a small account, 1,000. And my skills are improving. Do you think, is it a good idea to start a small account? Can't afford more than 10K. Yes, like, same thing that he said. What's the name? Mr. Gautam. Start with small account. $500, $400, $500, like, grow that to, let's say, like 1,000. Double that account in maybe like, month and a half to 2 months, then deposit more. Because at the end of the day, whoever's coming from the pain of losses, you have to heal, and the only healing you can do is by making sure you can win trades and let that compounding effect come into stage. Okay. What's your best setups? We already talked about those. I think we should do break even. Sir, adjust my stop loss on 5 minutes. No, not in 5 minutes. Don't adjust your stops in 5 minutes. All right. Keep things extremely simple. No bullshit. Don't need a PhD. Can you please say one or two about news and how they influence the markets? How news influence the markets? We don't know. Let's take a look at this here. All right, let's see what's happening. Okay. So Monday we have JPY holiday. And then Tuesday, we have nothing major going on Tuesday. Wednesday, we have Euro holiday, Swiss holiday. There's ADP. Okay, we got ADP. Oh, look at that. Look at that. We got ADP, and then we got interest rates happening on Wednesday. Wow, okay. Thursday, okay, nothing happening, unemployment, and we got NFP. Yeah, so we got like a decent volatile week here next week. See, now we got FOMC, ADP, and NFP. So Wednesday is when the party starts. So if the market knows that the party is going to start on Wednesday, because Wednesday we got FOMC and ADP, then Friday we got NFP. Maybe we may range Monday, Tuesday, wait for the volume on Wednesday, or we may have volume on Monday, range Tuesday, and have volume on Wednesday, or maybe we have volume on Monday, Tuesday, and Wednesday we just correct the volume, so anything can happen. And I don't really like to get in the technicalities of like, based on the daily and with news coming, we could go up or we could go down. No, I focus on, okay, if it's pre-London session and this is price action, what's the probability we can move up and what's the probability we can move down? That's it. I look at it from a session by session basis, or moreover, let's say from a 30-minute to 1 hour time frame basis. That's what I go off of. I've listened for some traders that you can make good amount of money during the months of March to June. After that, market will not give opportunities till year end. False. That's a lie. Don't believe that. How to catch big move like you before you got the big move, 100 to 200 pips. All those were fundamentally driven moves like Russia, Ukraine, then there was COVID, like, caught some nice news moves, so those are all that. When will the video on cutting losses be released? There is one in SRC. There is one, but the MFU, Market Facility University one, will be released on Friday. Sir, I use prop firms due to some financial issues, but I have fear because the stop payouts, especially on 100K, 200K account. Well, like, if you can afford to buy $100,000 account for $400 or $500, then you can afford to put $400 or $500 in a trading account, and grow that account to 1,000, then withdraw $500 and then get the funded account. That's what I would say that you should do. Deposit $400 or $500 or even $1,000 in a trading account, grow that account to the amount which you can withdraw and then buy the funded account. Because when you do that, now you're proving to yourself you're consistent. You're proving to yourself you can make money. You're proving to yourself you can make gains and withdraw funds. That's what you're proving to yourself. And with that proof and with that confidence in hand, now when you go to funded accounts, you're going to do well. If they don't pay you out, then that's a whole nother story. But in the beginning, you have to prove to yourself that you can actually do this. Please just clarify me that question. What's the leverage allowed with $1,000 account on Dominion Markets? Yeah, you can choose your leverage. You can have, I think 1 to 50 is there. I'm not sure, but 1 to 100, 200, 400, 500. Yeah, you have to heal. Our therapist here, therapy mornings. That's true. Have you used any prop firm yet? No, I have not used any prop firms. I've not used any prop firms. When I started trading, there were no prop firms. Um, my businesses were doing very well when prop firms came, so never even like my mind never even went there. But I think for good disciplined traders who don't have access to thousands of dollars, I think that's a very, very good opportunity for you to make some money. Why don't you trade other pairs like USD CAD, GU, AUD instead of GJ? So instead of pound yen, I don't trade USD CAD because USD CAD in the London session, it normally doesn't have volume because in the London session, the USD is closed and CAD is closed. Yeah, in New York session, USD is open, CAD is open. So then I don't want to do analysis on both currencies. GU, same reason. AUD, USD, same reason. So GJ, I like pound yen. What spreads do you offer US 30 on Dominion Markets? 20 points. Can you suggest one? A prop firm? I don't know. First started with $300 and grow to $780, and I withdraw and buy a funded account on last week. Oh, very nice, Nidal. Very, very nice. Beautiful. Do you trade every day, Monday to Friday? And if so, execute trades every day? No. Yes and no. It depends. It depends what's happening. Like this week, I traded 23, 22, 23, 24, 25, 26. Yeah, I traded every day this week. 1, 2, 3, 4, 5. I traded every day this week. But then you can see, I took 2 trades. Monday, Tuesday, 2 trades. Wednesday, 1 trade. Thursday, 1, 2, 3, 4 trades. Oh, there was some losses over here. And then Friday, I took 2 trades. 2 trading ideas. Does Dominion Markets offer the option to trade futures? Futures, no. Let's take a look at this chart over here. All right, so this chart is, yeah. What's happening here? What's happening, Kirtan? Kirtan. What's going on with this chart? Oh, sorry. Okay, no problem. No problem. So let's do some top-down analysis. Let's start with you send in Discord. Okay, so even if you're sending a chart in TradingView, this is all what you got to do. Listen, what you have to do is hit copy right here, click copy. Oh, what the hell is this? Oh, it's wanting me to sign in. Okay. So let me copy this. Yeah, you hit copy and it's going to show you an option to copy the link. I think. Maybe. I don't know. Send in Discord. Okay, let's do some top-down analysis on gold. boom, remove this, remove this, remove this, remove this, right? So, and also it's going to be interesting because Luke asked a very good question about these wicks here to the left hand side and how to kind of like approach them. Let's start with the weekly, right? So the last weekly candle, we basically had a rejection and now weekly is forming. And obviously we don't like, I mean, some people do, but I don't look at the weekly and say we can go down because we could also wick up. The good thing about this weekly candle is that it has no wick on the top and it's closing like this, which means there's a high probability we can possibly wake up and continue pushing down, which is 500 pips. Amazing. If we get that, awesome. Let's take a look at the daily now. Now, looking at the daily, but keeping in the weekly bias in mind, which may seem like we may continue to push down, the daily candle body is smaller than the previous one, which may lead us to believe that we may be creating an exhaustion over here because if we measure, if we look at this wick over here, wow, man, what's going on? What's going on, daily C trader? Okay, anyway, it's like we don't want to. So this is a 145 pip wick, and this body is around, 61 pips. So obviously, it's some sort of an exhaustion. But the daily candle can also move up to fill this wick, which we don't know yet. So let's keep on investigating, right? We're doing top-down analysis. Looking at the 4-hour time frame, now we have some more information. Obviously, on the 4-hour, what we have is a resistance up over here, right? We all can agree we have a resistance at the top. And now, since the 4-hour candle here has closed bullish, this becomes a support. We have a support on the 4-hour. Now, if we take a look at this, this is sort of like a range, right? 2348 and 2332. This is a 150 pip range. So if we break above the 4-hour resistance, then obviously we can continue to push up, wherever we want to push. But since this is a bigger range and normally people don't want to wait for the 4-hour candle to break above this area, let's drop down to the small time frame. But even looking at the 4-hour candles now, maybe we can visualize the next 4-hour candle to wick down and then continue pushing up in this range, So now remember, on the daily, on the weekly, we saw that maybe we can continue to push down. On the daily, we saw that the daily bodies are getting smaller. So maybe this is a rejection for price to push down, right? And this ties up with our weekly bias. And now when we take a look on the 4-hour time frame, the 4-hour is giving us some other information, right? So now we're going to keep on going with the information that's being provided by the time frames that we're looking at. Right now, in the 4-hour, we may continue to push up. Now, the only way the daily bias can be fulfilled or the weekly bias can be fulfilled is obviously if we break below the support for price to go down, right? So at this point, we're only looking at the 4-hour. Let's drop down to the 1-hour time frame. Now, looking at the 1-hour time frame, we have some more information. We can basically adjust this zone now that we have a resistance right up over here. We're going to put our blue line right there. And now we're going to zoom in. We're going to zoom in, and what we're going to find is that maybe there is some more zones happening on a 1-hour time frame. Obviously, we have the support on the 1-hour time frame, and then we have this resistance formed on the 1-hour time frame now. Now, 1-hour time frame is in a zone. This is a range. This is 76 pip range. Now, if this 76 pip range, obviously we need price to break above 2341. So, so you see how we're dropping down to the time frames and we're looking at ranges within the time frames and we're looking at to see that, okay, where can we go if we break above this resistance? Where can we go if we break below the support? So now let's drop down further to the 30-minute time frame. Dropping down further to the 30-minute time frame, this is where things get a little bit messy because so if we do break above 2341, then there's I would say like a 35 pip range for price to move up, because if a candle can break and close above 2341, remember we need a candle to break and close above. This is also based on a webinar we uploaded last night. If a candle can break and close above 2341, then this wick to the left hand side becomes a wick fill for the next candle. If a candle can close above this area, let me bring up my annotations. This one right over here. I think this has to be blue. Yeah, if a candle can close like this, close above this range, then the wick fill to the left-hand side, this one, this whole area, this becomes a wick fill. Then the next candle, you'd want it to continue to push up right here. So this becomes a wick fill. And if there's more volume, then maybe we can continue to push up, to fill the wicks to the left-hand side there as well. But the whole idea is for this candle to break and close above this area. So then this becomes a wick fill. So that's something that I would want to wait for, But this here, this is also a range, 85 pip range. So that's for buys, that's for buys that I'm probably going to look at. Looking at the 15-minute. I may want to stay away from this range. I don't trust this range. And also, Luke, I hope that answered your question there as well for the wicks. So let's take a look at this right here. So for sells, it's the same idea right over here. Because look, this candle at one point, it came down to the support, 23.33. We rejected this area just like we rejected here before. The next candle, boom, rejection. This candle, boom, rejection. So if a new candle comes in, as long as if the new candle is open, we don't know. So let's say this candle is still open, right? It's open. We don't know if this candle will reject the area to the left-hand side or not. We don't know that because this whole area, this is a rejection area, and we don't know if it's going to reject or not. So what we want this candle to close in the range, and ideally, we would want the candle to close, something like this, so that the wick to the left-hand side right here, it becomes a wick fill for the next candle to continue pushing down. That's what we won't want, because initially this is a rejection here to the left-hand side. And as long as the candle is open in this area, right, this whole area, as long as it's open right over here, we don't know whether it's going to reject or it's going to close in the area. So closing here would be much, much more important. If we didn't have these wicks here to the left-hand side, and if we had small wicks, then maybe impulse entry would make sense. But as long as they are rejection wicks to the left-hand side, you have to be very, very careful. Before we get there, let's take a look at this chart here. So when there's a huge liquidity wick that shows the move up with volume, it goes up with power. Yes, I would say so now, yes, because when this was happening on pound yen, man, it was just like, wow, pound yen, what are you trying to do over here? We saw this happen. We were like, holy shit, what's going on over here? It was actually pretty crazy. And now when I look back at it, I found different ways, like this whole big rejection gave us an opportunity right over here for an impulse entry for a buy. We broke above the high, stop, would have been 16, 17 pips, and it could have secured like 20 pips out of it, 30 pips out of it, And then probably right over here as well, we had an opportunity for price to move up in this, I don't know. But yeah, who could have thought that we would make these highs, man? The last time we made these highs were back in 2008. Back in 2008. Yeah, that's a long time ago. Long time ago. Wow. So for the buy, we need break candle, close above. Okay, break candle, close above. Create support. When next candle breaks the high previous, we can enter buy. Yes, exactly. But until that happens, we don't know what's really going to happen. So we actually have to wait for that to happen. Even now trying to do analysis on pound yen. I mean, I tried to do analysis on pound yen, and it's just like where the fuck do you start? I mean, look at this weekly over here. The weekly just left everything behind. The daily is just gonzo. 4 hour, there's no zones. 1 hour, the last zone we have is right over here, which is like just mind-bogglingly far away. Like this is like 180 pips away. So the 30-minute, the only thing we see on the 30-minute is right here, this support that we have right here. And the 15, I don't know. I don't even want to go into 15 minutes. So this is all what we have right over here. So whenever price has moved this much movement on price, The only thing that I want to do at this point is to wait to see if we can create some sort of a support. If we can create some sort of a support, then, I mean, if we can then break the support, then a sell would make sense. But one candle closing bearish, just like this right over here, one candle closed bearish, and the next candle also broke below the low. One candle closing bearish doesn't mean price is going to go down. It doesn't necessarily mean that. But we've created support, so we have to wait for the support to break. We gotta wait for the support to break. Okay, so is this still recording? It's still recording. Yes, perfect. All right. So let's see here. We have any question, anything that can come to your mind? Speak now. 9:22. We have some day plan here for the family later on as well. 9:22, is it? No, it's 10:22. 10:22. 10:22. Mostly everything. Yeah, like as we move along, as we go for the next week, we go into the week after that. Yeah, like more things are gonna come up, more situations are gonna come up, more times you're gonna see market move a certain way, and then you're gonna start to understand that, okay, maybe this is something I need help with, or maybe this is something I didn't know before, so let me ask. So like the market is forever changing, and we're also forever adapting and changing with the way the market moves. So like it's a never ending process. I'm still learning all the time. What's the best thing to do if the close is too further away from support or resistance? Very good question. So let's say this is the support and the close is 76 pips away. The best thing to do is wait for price to retrace. I would say wait for price to retrace, create support, and then go up. That's going to be the best thing to do. For price to retrace, create support, and then boom, go up. Or like, if we retrace till this point and create support and this range is not enough, then I would wait for price to break support to go down. So different thing. Simulations, no, can't do simulations. Already here for an hour and a half. Can you please walk me through how does the MFU work? This is my first day here. Hey, welcome. So first things first. First things first is you will get access to the webinars, right? From the webinars, there's a section called Start Here. You go through there. Then we have our Discord. We have different sessions in Discord. We have the general chat. We have price action where I post my content in price action, Asian session, New York session, London session. In London sessions, when I'm looking for a trade, I'll post what I'm looking at, and then if I do take a trade, I'll take that trade, I'll post about it, and then like some people take those same trades. But the aim for you being in Market Fluidity University is to be good enough to at least make $100 a month. That's your aim in the beginning, to make $100 a month. Your aim is not to be a millionaire. Your aim is not to retire your parents or yourself. I mean, that's the aim long term. But in the beginning, your aim is to be confident enough to execute a trade, confident enough to at least withdraw $100 from the market. That's your aim, And once you get disciplined with withdrawing $100, that's just going to compound over time. And that's the most beautiful thing. How to focus on charts. Sometimes I have solid plan, but I miss them. How to focus on chart? Well, once the price moves, making notes will help you a lot, guys. Most of you guys will not make notes. Making notes on charts, how you could have executed, is going to help you the most. So that's something you have to focus on. Can I access content from Discord? No, it has to be from the place where the content is stored. Is it possible to counter trend once candle forms support and next candle breaks support on GJ? Yes, counter trend. I have 200 USD in crypto, 300 in my Payoneer account. I'm just confused. Which method should I? Guys, don't send direct messages. No direct message. Which method should I use to deposit in Dominion so future I can have easy withdrawal in future? It depends. I think crypto to crypto is super easy. Crypto to crypto is super easy. It's super fast. How do you manage your business when you had started trading a long time back? Because at that time, business demand equaled time as trading? How do you use them both? So the time you want to give to your trading is maybe 2 hours a day. That's it. 2 hours a day you give to trading, and that's it. That's all what you do, 2 hours a day. And most times you're going to get your winning trade in the first 30 minutes, the first 1 hour. You're going to get your winning trade. Very rarely I get a winning trade after 2 hours of watching the chart. So very rare. Most of the times I get my winning trade within the first 30 minutes to an hour. Yeah, 30 minutes to an hour. But how to stay available to the chart? Do I need to be present every 30? Yeah. So I look at the chart every 30-minute candle close. When there's a lot of volume, I look at it every 15 minutes. But guys, listen. So this recording is going to be up in the database by the end of today. I'll also try to add some notes to it as well, so you guys can go through the notes of what we talked about. I thank you all for joining this morning. I appreciate it. I was up early here as well. And subscription to pay by crypto? No, we don't have that. We don't have that. We don't have the crypto subscription one. It's very hard to track that. So anyway, take care, everyone. We'll see you guys on Monday. Have a great day, weekend. Bye-bye.